Hello, everyone. Welcome back to the channel. Thank you guys so much. We are past 200 subscribers. If you're new, subscribe. Let's get to 300. And if you're returning, welcome back. I got a wonderful comment earlier today. And the comment is from Jordan, and it reads, Hey, I'm 30 years old and just started learning about finance stuff, and the infinite banking concept has been really intriguing. Is it still possible to have success with such a late start and just a normal $20 per hour job? Huge thanks. Your videos are always nice and clear, and most importantly, about Canada, which helps a lot. Anyway, thank you very much for the kind words. The first thing I want to address is getting into finance at 30 years of age. You know, this is why I really dislike traditional, financial planning knowledge. Everyone always talks about, oh, if you only started saving at the ripe age of 1 day out of the womb, you would be a millionaire by the time you're 40. Honestly, I think the general projection of somebody through life is that they go through their teenage years, they do not have to worry about money. Then they enter into their early adulthood phase that lasts, I would say, up to kind of the late 20s. And in that phase there is usually a series of mess ups, struggles, recoveries. And then finally, when people enter around the age of 30, they get to the point where they really need to kind of smarten up, quote unquote, and they get interested in this stuff. So I really don't think that you have a late start. I actually think that you are on track, if not ahead of where most people are. So I'm going to be talking about infinite banking as a normal employee, and what I always have to say is I'm not a life insurance agent. I am not a certified financial planner, nothing like that. I am just a regular Joe Blow that really likes personal finance and the infinite banking concept. Today, we're going to break down several things about your comment here, Jordan. And first, I'm going to talk about IBC with income around your income. I'm going to talk about if it's feasible, whether I would do something different, and then I guess some just general advice for you. So uh, let's just kind of dive right into it. So first of all, what we need to understand is what does $20 an hour work out to do? So what I did is I just simply said that you know 2,000 hours a year. Then you have your $20. Multiply that out, and then of course that's equal to $40,000. And then I just went and plugged it into an income tax calculator. Here is your monthly amounts, and here are your yearly amounts of income. Um, so if you are a single individual in this day and age, $40,000, you're certainly getting by, but I'm assuming that you are not, thriving excessively. And if you are, that means you're pretty darn good with your money. So props to you there. But I'm going to assume you are just a regular, everyday dude that's interested in finances. And I, you might not be a dude. Jordan is can be ready to sex, so that's fine. Anyway, so let's kind of dive into this, right? What I did is the ranges kind of ranged from 23 to about $2,500 per month, and I kind of said, 15% of your income is going to go into an IBC policy, all right? And so, what does IBC look like at a 15%? I think it worked out to be $360 a month. Your overall premium is about $4,300. Your break even ends up being between year 6 and 7. And you actually do get a fairly good growth of your infinite banking policy. One of the things you're going to notice right away is that the break even is a little later than when you start getting into, the 10, 15, $20,000 a year annual premiums. And the reason for that is because as your policy increases, it typically gets more efficient. In my discussions with practitioners, it's usually surrounding your death benefits. And so I believe the thresholds are 250, 500, 750, so on and so forth. And I think it stops getting more efficient past $1 million of total death benefit, at least as it relates to cash value. Could be totally wrong, but That is what I've been told. So, in theory, can you do infinite banking with this amount of money? Well, if you're going to save $360 per month in just regular savings, then certainly you can put it into an infinite banking policy. It does break even a little later, but again, the idea of infinite banking isn't really to make an extreme or a grandiose return. It's to have compounding, basically have your savings compounding at a rate higher than they otherwise would in a savings account. By the time you're 50, assuming you continued to make the same amount and continued to only put in the $360 and that you didn't take out any other policies or anything like that, you'd have $125,000 available to you that you can roll into anything. More likely than not, though, you're going to want to use it kind of in the 5 to the 10-year mark. And, you got 20 and almost $50,000. So perhaps that ends up being a down payment for a house or anything of that nature. So, to, I guess, answer your question, is it still possible to have success with your income range? It absolutely is. But you have to realize that the pitfalls at your income range are certainly higher than those at higher income ranges. And the primary reason has nothing to do with the policy, it has more so to do with the fluctuation of your expenses. So if your income is $2,300 to $2,500 per month after taxes, and that's assuming that there's no benefit or health plan or anything like that, your income very well could be lower. You got to realize if your rent is $1,000 and goes up 20%, let's say, well, now it's $1,200. I know, complicating math, right? Well, this $200 is a very, very big portion of your overall income, right? It ends up being, a little under 10%, right? And so it can start impacting how much you can save. And this is just one expense. If we look in today's climate, at least where I live, real estate is going crazy. Rental rates are going crazy, which means that, you may experience a massive rental increase. You may experience, food prices increasing. And then the next thing you realize, you're unable to afford your premiums. And if you watch the negatives of infinite banking, which I'll link below, you'll know that one of the issues is that if you can no longer afford your policy, then it starts to become uh, troublesome. It's not the end of the world, but it does start to become an issue, primarily because you may have to back off on your extra deposits, which go to your cash value essentially, and then back down to only your required annual premiums, which is roughly the $2,000. Again, it doesn't destroy the policy, but it does make the break even a little bit longer. And then, of course, it also impacts your cash values. So, if I was you, um, what I would do, I have two primary recommendations. Okay. Um, the first is really like this conversation is dependent on the fact that you know you can only afford to save 15% of your take home wage. If you can afford to save more than that, let's just say you're living off of $1,500 and you have $900 left over. I have no idea. It's unlikely, but again, I have no idea. Then perhaps you say, I'm going to take 50% of this and I'm going to put it into an IBC policy, right? And then I'm going to take the other amount and I'm going to save it in cash. Um, Now, yes, you are foregoing some growth on the policy. However, it is going to yield a double safety net. In the event something happens, you have cash to get you forward. And then, worst case, 2, 3, 4 years down the road, when your situation continues to remain the same or further stabilizes itself, then you can just go ahead and take out another policy on you or someone that you have an insurable interest on, and then have two policies going. And then you're only starting 5 years uh, further into the future, because I would suspect, and I know that there's some practitioners that watch this, and I would highly suspect that the average person who starts infinite banking is in their 40s or 50s. I could be wrong, but that is my general suspicion. The other big piece of advice that I would say is that infinite banking is a phenomenal concept, as is velocity banking, as is just being interested in personal finance in general. However, what I would highly recommend instead of focusing on how to maximize every dollar you have today in the form of growth, not this isn't to say, by the way, don't do infinite banking or don't do velocity banking or don't be interested in finance. But if I was you, what I would be focusing on is increasing this hourly wage. Now, how does this actually happen? How do you go about this? Because it's very easy to say, just make more money. Well, how do you make more money? So, every employed, high earning individual that I know, and I know a fair few of them, they have incrementally increased their income. They didn't just land on a massively high paying job. So, in your situation, you're starting around $40,000 a year. And by starting, I mean where you're at today, right? And maybe you've been at where you're at for quite a while and you go and you say, listen, I want a raise. And if they say no, then you go look for another job. The next job, might only be $42,500. Well, hey, that pays a large portion of your infinite banking policy. You may stay there 6 to 12 months. Next job might be $47.50. Now, I'm not just saying you go and exist at this job. You really have to dedicate it. You have to be the most invaluable employee ever. Don't complain, even when it sucks. Do overtime, even if you don't get paid for it. And become the employee that the business needs, not that the business has a position for, if that makes sense. And you'll very quickly realize that eventually you become so invaluable in your profession that garnering more income will start to be relatively easy. This may require an industry change. Don't think that just because you are I don't know, an IT support guy, let's pretend, right, that you're going to be an IT support professional forever. You may branch off into sales or anything of that nature. But focus, at least what I think you should do, is focus primarily on this income. Because if you, over the course of the next 2 to 3 years, can increase your income, even if it's only $10,000 a year, that is going to yield you far more money in the long run than owning the infinite banking policy or practicing velocity banking. Now, the best part is you can kind of do both at once. So I hope that helps. So to kind of recap, is it possible to have success? Absolutely. Is it possible with a normal 20-hour job? Absolutely. I think even if you stayed where you're at, you can do it. There are certainly a little bit more risks, primarily in relation to inflation as it relates to your other expenses. But I would focus on increasing your income, and you'd be surprised at how fast it will grow. It may require job hopping. 6, 12 months. As long as you do a good job and look for good position, improve your worth, it won't be hard. So I hope that helps. As always, if you agree with me, let me know. If you disagree with me, let me know. But just be aware, I am going to respond. I'm going to have a conversation with you. And I hope to see you in the comments and in the next video. Cheers. Bye.